Hey everybody, Kimosabi here. I'm going to do something a little different. I've been getting questions about Wyckoff accumulation, reaccumulation, distribution, and how they work. And a lot of people post charts with no volume. So I figured I'd give it a shot. Before we get into a potential distribution, let's go into what happened in 2022 and the accumulation range and how it acted. This is textbook right here. This is really, really good accumulation range. What a lot of people don't say about Wyckoff is it is the study of price action in relation to the volume profile, or how much volume you're getting down below. The volume spikes. Where are the volume spikes? So you can't really give yourself a Wyckoff accumulation or a distribution range until you start to have enough data in the charts, such as large volume spikes like you see down below here. As soon as you get that second volume spike, then you can see that's potentially stopping volume, especially after you have two. But this second one here, stopping volume very close to the previous. So at that point, I wanted to see how high price would get, but I anticipated price potentially getting all the way up here. It did not. It had an automatic reaction and just back tested that wick and came back down. However, that did give the possibility of starting to draw the box. As soon as you make that low, automatic reaction, come back down and test that low again, then you can start drawing this box. I think this is where cycle theory really would come in handy mixed with the Wyckoff, because you would be anticipating a low coming in somewhere around here, and you make a double bottom and you're accumulating, then you just wait for the spring and a reverse. But let's get into labeling. So as soon as I see those two volume spikes, the second one, I would label that the selling climax, and as soon as I could label that the selling climax, I would label this one preliminary support. Then I would be expecting an automatic reaction that I would have expected it to get a little higher, but it didn't. But it gave us the top of the range, and then price came back for the secondary test. And then all of this, that's just like random accumulation, keeping people guessing which direction it's going. So we just label those as tests. Then you have your spring. So on the spring phase of a Wyckoff schematic, the volume profile, usually you have a volume spike, very similar, but not quite as much as the selling climax. Usually the selling climax gives you more volume. But what's important is the candle spread in relation to that volume. Big volume spike, big volume spike, big candle spread, not so much candle spread. Like the candle spread on your selling climax was probably twice as much as the spring. So large candle spread, you're making a lot of progress coming down. With the little candle spread, you have a lot of effort shown by the volume, but you're not making much progress. And that shows absorption. That shows price trying to push down, but can't because you run out of sellers. And then interestingly enough, you had a little accumulation range in the spring before your breakout. This you would label as a show of strength, so that kind of puts it on your radar. That's probably the largest move that you got in, 6 months? And after the show of strength, you have a little shakeout, and then another show of strength. Now, in this yellow box, I had a lot of people asking me if that was distribution. I saw a lot of people posting Wyckoff schematics saying this looks just like distribution. This is textbook. And I said I don't think it is, because you have no volume. So this is the backup phase. on very low volume. Nothing's really going on here. Nobody's really selling. They're just kind of waiting for dwindling supply so that they can buy any more that people are willing to sell, thinking it's distribution. I think I remember people talking, oh, we're still going to 10K. This is the distribution, some kind of ABC pattern, and down we go. In this backup phase reaccumulation, you had even smaller little accumulation, and then higher highs, higher lows, a weekly close. I think it went a higher high right there, and there was an order block right there, and that was the entry for the breakout. Now here's another show of strength, but you did not get any more backup phases. So that shows strength in a market, and that's probably why price continued to push the way it did. It just kept on making higher highs, higher lows. And after you have your accumulation and backup phase, then you can enter markup. Your markup phase, you went from 25,000 to 72, almost tripling what you had there. And price usually, when it's in markup phase, it'll enter a channel. In hindsight is 2020, so this is the way we're going to draw the channel now. You can see at the center of the channel, like as price was going up, you had a reaccumulation right here. And you can draw that out. Just put another box on that. This was what, month and a half of price action. Very nice reaccumulation. That looks really good for reaccumulation. The volume was coming in at the highs, so you could see there was absorption there of any demand. It was getting absorbed by the supply, and price reversed and came back and did a very small accumulation pattern on like a 4-hour chart that we could probably draw out with another box if we zoom in really tight on it. What do you do here? Support there, preliminary support, something like that. And kind of the same concept applies. On the 4-hour chart, you probably could see the volume profile do the same thing, where you have your preliminary support, selling climax, there's down to your spring. As soon as it makes it back above the box, it finds support above previous supports. That's why I'm constantly preaching the wait for the back test of previous support. It usually ends up being support again, especially after you close a higher high. That's where you look for your higher low. And then you re-enter your markup phase, which if you were on a 4-hour chart, you could probably channel this, like drawing a channel inside of a channel there. So the blue channel went up, broke down below the channel, back above the channel, and held above the channel. That was pretty bullish until it closed a lower low. And then it was back in the channel. Then you revisit the bottom of the channel on the larger time frame. Let's get rid of the blue one. And now you fell out of the daily markup channel. So that leads us to where we're at now. Is this accumulation or distribution? And the argument can be made for both based upon the reaccumulation that we saw down below. That matches pretty good. Now I am in log scale, but those look good to match. So it matches pretty well in log scale. And if you think of this overall accumulation, reaccumulation, that reaccumulation could be distributing right here for a little profit before coming back down to back test this accumulation range from 2022 and grab this liquidity. So that's always on the table, and I'm open to seeing that. You would get your Elliott wave pattern that would just be 1, 2, 3, 4. 4 could be here or here. Then you get 5. So that would be an upthrust after distribution. And that's generally what wave 5s are. Wave 4 in Elliott wave tends to be choppy, confusing. That's kind of the hallmark of a wave 4. So it makes sense for this to be distribution on a lower time frame than like a weekly chart or a monthly chart, because this accumulation maybe means it goes way higher, but locally maybe you just get 5 back test and then you can go back up on the next cycle. We can zoom in to our current price action here and get the volume profile. There's not much to be said for volume. You have stopping volume and then you have stopping volume there. So that is an argument to say this is just reaccumulation and price is headed way higher. But Bitcoin tends to not have distribution in the normal way, I guess. You don't see the volume come in at the highs. Usually price pushes down into demand. So people always want to buy the dip because they think number go up. So you have resting orders that'll be all down here, and anybody that bought at, say, 15,000, 20,000, 30,000, now they have to sell it, but nobody buys at the highs. Nobody wants to buy. It's like, oh, that's at the highs. I don't want to buy it. But there's buyers down here, all at 50, all the way down to 49. You have buyers. So there's a nice range of buyers down here. And whoever bought down at 30, they're still doubling their money. They don't care. As long as they can find somebody to sell to. I mean, what good is it if they can't find anybody to sell to? So they'll generate the liquidity, the buy orders for people that want to buy the dip, and they'll gladly sell it to them. So somebody's been selling in this range for sure because price hasn't went up. So somebody's definitely keeping supply on the table. It could just be the market maker. It could be BlackRock. It could be people that have been holding Bitcoin for the past 10 years. All through this, we definitely had some sellers like the, what was Germany was selling here, I think it was. You had the miners that had to sell here. And then this, I don't remember what this selling was. And we never do. We never remember. It's like, oh, yeah, there was an FTX collapse that happened a few years ago. I don't know nothing about it. We'll forget about it if time goes by enough. But yeah, I would be open to this being a distribution of the purchases from 25 to 30K. Now, that doesn't mean price has to go down to 10K. Price has to go down to 8K, the way you hear a lot of people talk about. It certainly doesn't even have to have an extended bear market. This could be analogous to 2019, and I can make an argument for that. But before I do, let's switch this over to linear scale, because that gives you a different look with regards to accumulation and distribution and how it ends up working. So we looked over this textbook accumulation range, and there is a significant difference between what's going on now and what was happening there. You can see the price looks to be dead. Looks like it's not moving very much by comparison. Keeping it very quiet, very slow. Even extending this out, very slow price action. Very boring. While this, look at the movement that you have here. Up and down, very choppy. That's like advertising. Think of it like advertising traders. Like, hey, come and trade this market. Come on and trade this market. This market's moving. Like, there's some action going on here. And of course, the bull flag is painted. This will get you buyers for a distribution. And then you pop up, stop everybody out, up thrust after distribution, and then you run down and back test this. And rinse and repeat. It happens over and over. But this particular chart, the way it looks, they're advertising to sell. That's just objectively speaking, that's what it looks like. I mean, I'm super bullish on Bitcoin, but I can't deny that that looks like distribution. But even if it is distribution, there's still trades to be had up and down. So we'll keep this in linear scale, and we will draw this inside of a box where we have the highs and lows. The highs match pretty nicely with that part, and the lows match pretty closely with that. Usually what I see in an upthrust after distribution is price will move up in a similar amount to the range. That's like minimum target for an upthrust after distribution. Oh, I brought it all the way down. We're just measuring the range and projecting from the top of the range, which gets you to 90,000. So that's just the height of the range projected up. Your target's 90,000 for an upthrust after distribution, and that'll grab all this liquidity and then come back down into some kind of bear market or crisis. Some kind of crisis can happen real quick, and you have a liquidity grab down, and then the real bull market starts. That's kind of what I'm expecting based upon everything feeling like 2019. Well, I just noticed this on the weekly chart. There's no volume on Bitstamp. It's all gone. It was big in 2017 all the way into 2021, and then just nobody's trading on there, I guess. But price action is still valid. So let's take some measurements of, what did I want to measure? The height of 2019, how much that went up. And that went up 362%. And our current rally from 2022, we're currently up 385%. So acting kind of similar to 2019, along with the poop coins, we'll call them, that have not been keeping up with Bitcoin. I know that comes later in the cycle, totally fine, but the way Bitcoin dominance is rising, it's analogous to the 2019, what was happening there. Also a few charts about liquidity and whatnot that are saying liquidity is opening up. Those mimic 2019 pretty well. That's not to say that we're going to have this COVID crash come like from this current posture. Not at all. But before real expansion may happen on Bitcoin, we may need to have a crisis. But perhaps before the crisis, we have the move that completes, mimicking that up to right about there. Something like that, like an ABC up, ABC up, ABC up. And then from this posture, sometime in 2025, you have some kind of crisis happen. If you guys are still here listening, 18 minutes in, got to think about the debt ceiling in the United States. We currently do not have a debt ceiling in place, and that is supposed to be reinstated. I think it's July 7th or January 7th, January 5th, somewhere in that pocket. And we will have a debt ceiling to contend with and debt ceiling negotiations. So it could add some volatility to the dollar and to liquidity. And if liquidity dries up really quick, well, so does Bitcoin. So we have liquidity here, we have liquidity here, and we've been in this range currently for the past 5-6 months. Wouldn't it make sense to grab liquidity, and then continue up? Just my thoughts. So is this distribution? I would say probably, but not the macro distribution, just a local distribution to grab liquidity, reverse, and then reverse. And then when the Elliott wave traders think this is wave 5, Bitcoin's done from there. This ends up only being wave 1 of 5. And that goes 1, 2, then you're going for 3. That's when they really devalue the currency. Kind of the way I'm looking at it. Does that devaluation start happening in 2025? Maybe, but it would take a quick crisis and a quick solution to the crisis, and then you'll have this go. And the crisis doesn't even have to be real. It could be totally manufactured. And this could have been manufactured. And it just manufactures liquidity to be able to print dollars, get people wrong-footed and not ready for that. I mean, I know people that were panicked here. They were like, I'm not investing in anything. The world's going to hell. I'm going to lose all my money. Well, if the world's going to hell, what are you going to do with your money anyway? Your money is going to be just as worthless. I mean, take care of your bills, keep your homestead, but why not invest? Throw the money in the markets because they start printing. There was a story that I heard of a trader. Was that Mark Douglas talking about that? Talking about somebody said, 1988 or 87 or something like that. It's the end of the world. Some kind of bombs dropped somewhere or something like that, and the markets were tanking. And they said, well, we better short everything. Where that's the exact opposite of what you should do, because if the world is actually going to end, nobody's going to pay you on your short positions. You may as well play it as though, hey, it's another fake out the way we've had for the past 50, 100 years. Turns out everybody survives, and there was money to be made. So the YOLO trade happens when everybody feels that the world is going to end, and they don't think that the stock market is the place to put your money, or gold, or Bitcoin, whatever. They say, I'm not buying that. It's going to go down because everybody's going to be locked up in their house. Like, well, if everybody's locked up in their house, who cares? Throw caution to the wind and buy the dip on a crisis. So I'm looking to buy a dip if it gives it to me. If you look at the higher time frames, something that's really cool is the monthly closed a higher high, and if it closes out the end of the year somewhere up here, then you have a higher high, and then you buy the higher low whenever that comes. Could be at the cycle low in the 2026 range, or it could be mid 2025. Maybe you get an ABC or something like that. And got to finish off the video with, how would I be wrong that this is a smaller distribution? It's very, very easy. If this leg comes up here, it doesn't retrace, and it mimics this reaccumulation, it'll continue the markup phase to roughly 240K, and then you repeat that before the upthrust after distribution, and then hard pull down into the 4-year cycle low. I'd be cool with that. You never know what the market's going to give you. Just be ready for all outcomes. So you take some profits. If it keeps pushing and holds there, you should have a reaccumulation, and that'll give you your invalidation for the trade up, and then keep on pushing. So it's still too early to call reaccumulation until I get a leg that goes up like that and doesn't even back test, and it just holds above 100K for probably a month. That'll look good, and probably find some place to invalidate a trade setup. And then if price trades up and gets you at about 90K, 95, and comes and closes back inside this box, that would be a swing failure pattern. Then look for the lows to be broken, back test, and grab lower liquidity. Alright, so I hope that was helpful. Not sure what else I could add. I guess ask your questions and I'll try to give more information. I've been a Wyckoff trader for the past 10 years, so I use it in a lot of my analysis. It's just hard to explain a lot of the time, but hope that was helpful. Have a good night. Keep your stops tight.